something I think it was on CNBC this morning, saying, "Does it really matter?" So I think it was an economist in London being interviewed, and he said, "Well, not really. It doesn't, does it? It's just the momentum of obviously the geopolitics that's going on at the moment around the world. Obviously, the war in Ukraine, the invasion by the Russians." Underpinning everything at the moment. The EU are speaking to China at the moment today. Obviously, the peace talks in Ukraine and Russia are not progressing, and all sorts of news flying around. So, does that impact? Yes, it just adds to you would argue, just all of that adds to the momentum of the interest rate hikes that the Fed are going to get into and going to have to get into. Over the next coming months. Have they been slow to raise rates? Many are saying now, yes, they are. Is stagflation a real issue? One could really argue, yes, it is. Obviously, the only issue with stagflation is we've got very low unemployment rates at the moment, and obviously today's data is key to that. But the data this morning has just added to the woes that was happening anyway. And then the impact of the situation between Russia and Ukraine has just added to the misery, really. We've had very weak manufacturing PMIs across the board, from China to the UK to Europe. We've got record high inflation in the Euro area. So recession, retreat, economic decline, recession, call it what you like, is sort of in the background in the UK, in Europe, perhaps less so in the United States. The Eurozone inflation data this morning was 7.5%. It was 9 ticks above expectations. They're expected to come in around 6.6%. It's coming in at 7.5%. That's a big markup, a record number, 7.5%. We've got a 7% issue in the United States as well. So yeah, big numbers. So obviously today's numbers are key. A big miss, which is possible. The poll, the range on the poll on the Reuters poll was down to 200,000 and all the way up to 700,000. The consensus is around 490,000. It's 480,000 on the Bloomberg poll and 490,000 on the Reuters poll. So, but obviously these polls have been way out in the past. Last month we had a 680,000 number, or 678,000 number, much higher than expected. So these are just obviously estimates. Let's see what the real data, and obviously the revisions as well. The revisions going forward are always key as well. So let's have a look at the markets as we go. Let's have we've got some people coming in already. Hello, Philip. Hello, hope you well. Subaru, hello, my friend. Hello from South Africa. Is that line on? Gold lines asking about gold. We'll come to that Waylon in a minute. I'll bring the gold chart up. Super a minute. Want to know about gold? That's 2 of you asking about gold. Gold. Yen is now ready. Okay, right. Nasdaq gold. Okay, let's just have a quick rummage around the markets. And let me just move me down a wee bit. What's this? This is the dollar yen on the daily. So if I look at gold, gold was the first request. We've still got 5 minutes or so before the data comes out. Remember, let me just finish on payrolls. Headlines around about 490,000. We're expecting a bit of a decline in the unemployment rate. It's already more or less, one would argue, you could really argue, we're at more or less full employment at 3.7%. We tick down again. 3% is really that full employment target. Earnings is expected to stack up again to 5.5%, and the participation rate is likely to remain, or expected to remain, around about stable at 62.2%, 62.3%, something like that. So see what that unemployment rate looks like as well at 3.7%. So interestingly, the wider, where's my U6? I can't see my U6 on here. I'll come back to that later. Okay, so no Canadian data today. Remember, sometimes it rolls over the Canadian payrolls, but that's next week now. Right, there's lots of requests going in here. So let's have a quick look at gold. Gold here on our daily time frame. As you see, we're very much channel bound in this second half of May. We've been in the second half of March. Our March low was down here around about 1890 just earlier this week for March. Our high for March was all the way up here at 2070 on the worry and the expectation of the ongoing crisis in Ukraine. We've come back down and we're really channel bound. We need to get over 1950 on a higher time frame. We're going to move up back over the 20-day moving average here. And as I say, 1890 is our low. If we go intraday today, it's a bit of a sideways, a downward tilt. This is that rally yesterday to 1950 as well. So we've been moving lower all day on a generally stronger dollar this morning. So again, as of yesterday, let's have a look. Yesterday's low took us down. I'll put that in there. Yesterday's low took us down here to 1918. So that's the downside target perhaps today. If we breach that, was also a low or lowish area here on Wednesday as well. Early in the week, as we said, which was back in March now, so remember there's some issues there. It would take us all the way down to 1890. So we're biased lower at the moment, and we shall see how we go. Right, let me just go through all this. So that was Forex asking about gold. Waylon. Again, guys, put the time frame that you trade it on, and we'll look at the lower time frame as well. But here on the hour chart for gold, it's ticking lower. The 4 hour, let's go back up. More sideways action, topped at this 1950 area, and as we saw on the daily time frame a minute ago, we're in this channel bound area between 1950 at the top and 1890 at the top. That was an intraday spike. So the low of the day so far for the second half of March has been around this 1920 area, so a tighter $30 range there on the 30-day charts. Trade ticker, good afternoon. Gold is a good buy, he says, at 1921. Well, we'll see. Remy's asking about how is yen. Well, yen has recovered from the shakeout we had in March. So we rallied here. This is the daily time frame, Remy, for yen, dollar yen. I'm sure you're well aware of it. Sort of sideways action here. This was January. This is February. Sideways action, ramped up, took off here at the beginning of March, and it hasn't looked back. So from this 1465 low here for March, we topped out all the way to 125, and what a rally it's been. Very, very strong, trend traders delight. No comments here earlier in March from the Bank of Japan or the government of Japan as the yen weakened significantly. We broached 120, we broached 122, 123, and it was only when we got to 125, which seems somewhat inevitable as these trends run, that we had an intervention or comments and then final intervention this week from the Bank of Japan as they're trying to defend the 10-year yield curve. 0.25, 25 basis points is the yield curve, the yield maximum ceiling the Bank of Japan have set themselves. Remember, the inflation in Japan, absolutely not non-existent. There's some signs of it coming through, but very, very low compared to the rest of the developed world. Less than half of 1%, the overall CPI rates for Japan. So very, very muted. And so here, if we come down to the hourly chart, which I'm sure you're more interested in, Remy, we've descended basically from this 125. So let me just put a little, this trend line from this week was broken yesterday. So we've been moving down from here, from this high on the 28th. So we were down. This is what are we? Friday, Thursday, Wednesday, Tuesday. So Monday's high, and down we've gone, and then we've found this level here, 121.30 here on Wednesday, yesterday, Thursday, 121.30, and then we've rallied off that now. We're currently trading at 122.50, so it's bounced up a wee bit. Next resistance, as you can see during the week, was that there's another big candle there. It takes us to 123. So 123 is a target to the upside. But as you can see already, intraday, we've already had two fractal highs, we've had two fractal lows. So intraday at the moment, head of non-farm payroll, we're in a little tight channel. Let me just put that on for you. So we're in a little tight channel at the moment here on the 1 hour time frame. Down here at 122.25, 122.75. So 50 pip range today at the moment. And the data must be out. Let me just go back to the data, guys. I can't share it with you, unfortunately. But let me just run through the numbers. So it's a miss. It's still quite hefty. It's 431,000. Average earnings have gone up higher than expected. So again, the squeeze on wages is continuing to push wages up. Earnings have gone to 5.6. Participation rate has ticked up another 2 ticks to 62.4. And the unemployment rate has slipped again 2 ticks to 3.6% from 3.8%. So overall, that's a strong jobs market. Again, it's more data adding to the strong jobs market. The dollar will probably tick up on that, but overall, it's adding to the likelihood of the Fed having to act quicker than perhaps certainly than they were anticipating on acting. So we've got an initial. Let me just go back to this. Actually, just go to the 1 minute time frame. So here, this is the 1 minute on the yen, guys. So the dollar's benefiting currently, certainly against the weaker yen. Here on the euro, let's stick it now. It's reacted here. So here on the euro, you can see it's benefited as well. Euro moving down here to 110.40 in these short instant reactions. So the dollar's immediate reaction to the headline figure, the average hourly earnings going up, participation rate going up, unemployment rate coming down, is positive. The higher U6 unemployment rate is also under 7% now. It's come at 6.9%. So all of that is positive for the US economy, because obviously, when people are in jobs, they're getting paid a bit more. That should feed through to people spending more, but it's also adding to the inflation story as well. So it's still adding to the pressure on the bank, the Fed, to act perhaps more quickly than we were anticipating to do just a few months ago. But next meeting is May. Talk of a 50 basis point rise will come, no doubt, raise its head again. This is another strong jobs market. Interestingly, the previous headline from March has been revised higher by another 70,000, another strong number. So it's 750,000 is the revised number for March as well. Revised from 678,000. So you see again more pressure to the upside. So although this is coming missing expectations, the headline at 431,000 compared to 490,000, that again could get revised higher next month, as this month has as well. So it's a strong US jobs number, which is benefiting the dollar at the moment. But we'll see how all that pans out in the next hour or so when we go into US Open. So a strong US jobs day for the US market. So let's have a look. Who's asking about other things? So Injok is asking about Bitcoin, not Bitcoin, Nasdaq. So this is the Nasdaq CFD on the futures. So let's just go back to a higher time frame. So the Nasdaq here for March, we went all the way down to 12,945 here, the low, intraday low in March and April. Obviously, since then, we've recovered and responded quite positively. Is it a bear market bounce? Some are saying it's a bear market bounce. Some are saying the bottom's in. It's too early to tell it yet at the moment. But in the short term, certainly we're back over the 20-day moving average. And that's enough to... no, it's crosshairs aren't. Well, I guess they are. So here, middle of March, we bounced quite significantly. Strong day on the 16th there from this worry about the war. We moved down to 12, under 13,000. We bounced and we've moved up quite nicely. Thank you very much. We're in the top half of the Bollinger Band still. We're still above. This is the 5 and the 9 EMAs here. Let me take that off. That's a bit confusing, isn't it? This is the 5 and the 9. So 2 down days here from this big, long, positive rally. So where have we stuck? Well, another big fat round number. We've stuck at 15,000. Let me just put that line in there at 15,000. You'll see what I'm talking about. I'll make that a big, thick one for us. So at 15,000. So 15,000, 1, 2, 3 is where we rallied to and through quite significantly this week through 15,000. But we've come back down through it yesterday as we sold off for 2 days. But it's still bid, basically. That's still bid. So what you'd look for now is that resistance up there. So that's our break of 15,000. So 15,225 is our next upside target. If this is going to move to the upside, it needs to break those 2 daily closes, which we got to this week. So Wednesday we closed. Thursday we opened up here at 15,205, and we've had 2 1% declines. 1.5% we went down yesterday. Having some very, very significant. This is bullish. This is a very bullish move. This one here, this reaction in March. So is it? If we zoom, let me zoom in. Excuse me. Zoom in here. This big. Excuse me. This big moved down to a bear market from 16,600 plus. We moved down, excuse me a minute. Obviously, we went negative. We went to bear market. 20% moved down here. This 13,000, but we've recovered. 2,000 points here from 13,000 to 15,000. Then we've ruled on. It's still big. It's still up. There's the 20-day moving average. Back in. There's a 20-day move now to the midpoint of the Bollinger Band. As you can see there, it's actually I quite like that one. It's down there at 14,230. So that remains bid on the higher time frame, my friend. Remy, hello. How will yen do? Well, the yen should have weakened, or the dollar will have moved up against the yen on the non-farm payroll. It's the 5-minute chart, 1 hour chart, and zoom in a bit. There we go. So as I was saying earlier, we had this big sell-off all the way down to 121.30, and it's bid today. So, but today, if we zoom up again, I thought I talked about this, but yeah, we're still stuck in this channel. So these fractal highs is 122.75 needs to break to the upside, and our support today is 122.27, which is where the 20-hour moving average is in the middle of the Bollinger Band. So that's our support, 122.25, and the top is 122.75. So 50 pip range for dollar yen traders. Nicholas, hello. Nicholas from Uganda wanted to know about the euro. Nicholas, again, should have weakened, one would have assumed on that data. This is the euro on the 1 hour. You can see it's been drifting down all day yesterday. We topped out. Actually, let me just take you back to the daily again. So for March, obviously we've closed March out yesterday. We were as low as 108. For the whole quarter, we were up to 115. So a huge 700 pip move here for euro over the quarter. But for March, we were as high as 123 here, right at the beginning. As obviously the euro's been the most under pressure because of the Ukraine war, or the Russian, or Putin's war, should we call it that? Because that's what it is. And has recovered. Where's my line gone? And has recovered since. So where's my? It's not gone on. So that's a bit of a support line here for euro pushing back up. So we've pushed back up. We went back over 110. We went as low as, I say, 108. We're back over 110 this week. And so far, we topped out this week around 111.75 and then come back down. So if we zoom into today, you can see there's our top from yesterday and earlier in the week up here at 111. Sort of 85 area. I say 75. Sorry, 111.80, and then it's just been moving down. So here with this crossing trending following exercise, it's been short from early yesterday morning, and you really haven't got out of that. You might have got out that on that spiky hour there, but got back in the following hours. It's continued to trend down. Got out this morning and then back in ahead of non-farm payroll. Might have got out. If you're going to trade this like on an hourly chart on non-farm payroll, I wouldn't suggest you do that, but you can do what you want. But that's the strategy of this, or that is the rules of this strategy. It's still below. You see the Bollinger Band's narrowing here. See the squeeze in here ahead of non-farm payroll. So something's going to go off here. It's normal, but the trend remains down. We've gone down. See how the Bollinger Bands have we've gone from wide. They've squeezed in as they've flattened out here. Around about 110.50. Always significant the squeeze on Bollinger Bands. Watch out for them. So 110.62, 110.60 is where the squeeze has come in. Then we've legged down here, and interestingly, the current hour we've gone down as low as 110.35 presumably on the initial announcement on the non-farm payrolls there. But here on a 1 hour time frame, it's still biased to the downside, Nicholas, my friend, basically. For the first day of March. Manjur, Euro-CAD analysis, please, in capital letters. Have I got Euro-CAD here? I don't think I have, but let's find it. File, new chart, Forex, Euro-CAD, Euro-CAD. There we go. Let's put the same template on we're looking at the moment, which is this is crossing average. Banjur, I don't know what time frame you're interested in, but again, let's just go back to how did we do in March? Well, there we go. The trend remains down, as with all the euro crosses. Here, the 23rd, this is the day before the actual invasion was announced by Putin himself here. We were all the way up here at 144.20. In fact, earlier in February it was high as 146, but that's trended lower. Bit of a kink up here at the beginning of March, but then it's gone lower. Then it's bounced up. So we've got this classic sort of wave going down. So down, retrace, down again, retrace, down again. So our low for March was put in right at the end of March, which is always interesting. Then we bounced off 136.70. But again, another one, as you can see there, or I hope you can see, where am I? Zoom in. You can see how we've ran to the resistance area of the 20-day moving average. So yesterday, 3 days up into Wednesday, 139 is clearly where that resistance is sitting through there. I would guess, 139, 139.25. I'm going to take 25 pips there. But with all this pips on offer down here, let's not worry about that. So it ran into that and bounced off that. So a down day yesterday, quite significant for the euro, and a down day today for Euro-CAD as well. So we're currently trading at 138.20. Zoom in a bit to a tighter time frame today, as you might expect. It's weakening. And again, another one, if you trade this intraday here with that strategy, you certainly would have got short here yesterday. Lunchtime, if not the hour early, it did, but it didn't really break it significantly. Wait another hour, and that's a nice significant downtrend out there, back in short here. That short didn't work out, but then short again ahead of non-farm payroll, and that remains short at the moment on this 1 hour time frame. But we can see we seem to be putting in a floor today, which doesn't seem to want to go below it, around about 137.95. So 138 is that low today, Mansour, my friend. So 1 hour remains negative, 4 hour is still negative, and daily is still negative as well, because can't get over that 20-day moving average. Mansour, did you watch we talked about Nasdaq, hopefully you've seen it. Ask again if you've not seen it. Let me just check my Facebook friends. Just check that. Bear with me a second, chaps. There we go. So anything on Facebook? Let me just check if anybody's, because I can't see the Facebook questions. Bear with me a second. I'll give you Nasdaq Mansour. We said, I'll say hopefully we're here when I was talking about a minute ago. So bid, we broke 15,000, 15,225. And let me see. Anything on it? Tom's asking about Nasdaq as well over on Facebook page as well. So let's just go through let's go through the Nasdaq again. So we've had a strong rally. This is a very positive rally. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days to the upside. Of let's say 14 days now as we roll up. But there's been 2 big down days at the end of this rally as we got to 15,225. So the argument basically is this a bear market bounce? Some are saying it is, or is it a start of the rally upwards with a floor here at 13,000? Well, at the moment, certainly on this short-term basis, it remains long from this 16th of March break. The histograms here on the. Can you see the histograms? You can't, can you? Yes, you can. Just above my head. So the histograms here, you can see the signal line didn't break over the zero line until the price of the market topped out. You can see that there. But the histograms still remain long. It's still positive, and that's going up. So this bit of a retrace. So 15,000 is key. Our 20-day moving average all the way down here at 14,200. Our first big support is 14,780, where our 9-period EMA is. I'm not sure what that 14,680 line is. I don't know what that one's in there. But there's 15,000 and then 15,225. So rally, bit of a retrace for a couple of days, which you might expect into the end of the month, and perhaps we need to move up. So next big buying opportunity will come as we break the 15,225 area on an end-of-day basis. But that still remains bid for Mansour and Tom over on Facebook, my friends. Hope that's answered your question. Where did I get to? Next. question is Bunks asking dollar to strengthen, dollar down. Yeah, I mean that the certainly that's been. If we look at this 5 minute chart, certainly with the immediate reaction was to the downside on that data. Bunks, and the higher time frames remain sort of biased to the downside here on against the euro, for instance. So 1036 was the low of the NFP announcement, but we need to get over 10. In fact, it's a bit higher than that, isn't it? Or was that? Might have been. This is yeah. So on an hourly basis, 1065 is the top end we need to break over, and that's where the 200. That's where the 20-hour moving average is as well. So this squeeze here on the euro on this 1 hour, maybe looking for a break lower. I think that's the daily. That's remember this red line is that daily time trend line we put in, and a break higher through the 20-hour moving average takes the top of the Bollinger Band there at 1080 for the top side. Okay. Somebody's trying to bid up gold, aren't they? Trade ticker. You're obviously trying to pump gold, my friend. Go and pump it somewhere else. Tell me your technical analysis. I'll tell you. Certainly, 1922 has been on my charts all week, so it's fair comment. That's a key level. But Roulette asked about gold as well. Let's have a look at gold. So for me, really, this on the daily time frame, really, there's been no action for me here. On a end of day basis, it's just been tracking sideways. So it's really been the oscillators, the channel traders in play here, with a top here around about 1950 and a floor here around about 1920. And as trade ticker keeps telling us place your buy orders at 2019, 22. He's obviously got some sort of bent on that. Kadir, sorry. Kwama, sorry. Yeah, gold, Ruland. Yeah, gold. Really sideways action here on a daily basis. So 90, the big lines to break, and 1950 to the upside. We need to break top of that and keep going. As you can see, we put in a fractal high here, which sits just even higher than that, 1957. So 1950 definitely needs to break on an end of day basis, and more significantly, we did here on the 24th. The floor here for March, seen on an end of day basis, hasn't breached that 1920 level really. So that's a key resistance level. Intraday, we did go as low as 1890, so a full $30 lower in the intraday basis. But certainly a big end of day support is sitting around that 1920 level. Hence, perhaps trade tickers buy at 1922. As far as today's concerned, again, there's not a great deal of action on it, to be honest. It's since yesterday's rally was up, we triggered short here into close yesterday, sideways before NFP. We're down this morning, sideways in the Asian session. Down in the early European session, and it laid down here before non-farm payroll, and it's bounced a wee bit at the moment, but that still is negative. It would need to break 1935 to the upside to start moving back up, and then the day high sits through there at 1939. So it's still, although it's bounced in the last hour or two, it's still short at the moment here on the hourly basis. So they may run out of steam. As you can see, the MACD is still sloping down quite significantly. It looks like it wants to break the zero line. It may not. It may sort of curve up here on this 1 hour time frame. But certainly that's what gold is looking like. Come here. I hope that answered your question. Kwama, hope it answered your question, my friend. Daniel, hello. Hope you're well. Staying safe. Look forward to the weekend. April, hello. Yen, I think we've looked at this, haven't we, Remy? We did look at yen, yes. Daniel's asking about dollar yen. Analyst, please. Let's go back to dollar yen. Let's do about dollar yen. As we said, this is the 1 hour. Let's go back to the daily. So big rally to 125. We then shook out for 3 days quite significantly. Now we bounced today on the sort of supported by the non-farm payroll data. Remember, the Bank of Japan, the government sort of ignored the weakening of the yen, but it couldn't go on forever. It's a huge 7-year high here at 125. So we've cooled this week quite significantly as the Bank of Japan have intervened to defend the Japanese yields, the yield not going above 25 base, 0.25 of 1%, 0.25 of 1%. So we were 3 days down for dollar yen. We went to 121.30, as we said earlier in these hourly time frames. You can see this area here yesterday, Thursday, Wednesday, and now we've rallied today 122.75. We need to break to go to the upside. And at the moment, it's a strong current hour candle, so that's looking relatively strong with a sort of support down here at 122.25. So tight 50 pip range ahead of NFP. Break above that, we can get to 123, and then 123.10 would take us back to this big candle, this big down candle here. From Wednesday for dollar yen. Sam, we did gold a minute ago. I'm not going to go back to gold. 2060. Is that your target, Ucom? It's a long way away, my friend, but the best of luck. Gold will drop. Very good. Pound the guppy. Who's asking about the guppy? GG gameplay. Let's have a look at the guppy. Another one that's had a great run and turned around quite significantly. So this is the guppy, the pound yen on an end of day basis. Excuse me, actually, the drink. Nobody else have on Facebook. Let me just refresh my Facebook page. See if anybody wants to say anything. I'm sure they do. But as you can see, that's a very strong positive chart, GG. So from a low here at 151, we went all the way to 164.60. Thousands of pips on offer there. We come back and found we've retraced. Obviously, that was just intraday. But on an end of day basis, we've found some resistance at 160. We found some support yesterday and today as we cooled as the yen's bid, and then we bounced again today as the yen's a wee bit weaker. Coming down the time frame, so that remains very much bid, the sterling against the yen, with the 20-day midpoint of the Bollinger Band there at 156.95. So we're all at 157 for our 20-day moving average down here, 156.90. And again, you can see how the Bollinger Bands were opened up. We had this pinch here, pinch point, and that's what's happened. There's a good example of it, isn't it? So here we've done a nice rally for a few days. I mean, this strategy would have triggered long here on another one that's triggered long on the 16th. This big strong candle here on the 16th. The pinch point came later, didn't it? 2 days later. So the Bollinger Bands have pinched in, tops come down, the bottoms come up, and it's because we broke this 156.90 level, which is where the 200-day is now, the 157 level, which was the resistance here, the top from February. So we broke that, and then that energy has bounced the following day, broke over 160, another leg higher, and now we've rolled over and come back to 160. So classic sort of wave action there to the upside, and all the time we're long, and even that is still long. If you would trade using your 9-period moving average as your get out, you're still long. If you've been trailing your stop loss up, you've probably got out this week as it's rolled over and taking you out. If you're doing a candle count back, lowest and lower for your candle. So it's had a very, very good run. Lots and lots of pips on offer being bagged there. So don't get greedy. But intraday, if we come down to the day, we can see we've bounced off this 160 level. This is our pivot point, 160, round number here for Wednesday and Thursday. We've rallied off that again today, and again rallied to 161 at the moment. So 161 is where we're struggling to get above here. See, 161 today. So bang, 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 bang. So 1, 2, 3, 4, and possibly now the 5th hour of today's European trading here from 9 o'clock this morning, 7 o'clock this morning. So 161 is becoming the resistance today, but it's still looking up. It looks like that may be set now because we've got 2 fractal highs in there at the moment. So that may be looking to move back down. But again, intraday, the support is there. The midpoint of the Bollinger Band, the 20-hour moving average sits at 160.48. On the old guppy, GG, the best of luck, my friend. Lots of questions here. New job, we talked about Nasdaq. I hope that don't mind. Tom, thank you from, I got you from Facebook. Thank you for coming here as well. Legit is asking about guppy, not the guppy, the cable. Let's have a look at cable. So this is the daily legit fund. Very good. So 130 was our low for March. Our high for March is 134. 36. Obviously, in February we got higher than that. We tested within a smidge of 137, and in February we'd got within a smidge of 138. That high up here. Sorry, I'm talking about January. We were up at 137.50 area. So we've moved down on the bid on the dollar because of the war into 130. Bounced off 130. Couldn't get back to 133. 133 is up here a wee bit, and then that's rolled over again. So again, another one that's got support at 131 cable this week, although we've been under it. Some clear support around number. We closed into the month at 131. So if we come down into today, there's our 131 level. We didn't, get to it yesterday. We've broken over it on Thursday, but again, the highs from Thursday was there. The high from yesterday was there, and the high from today so far is there. So that's that's a sign of the dollar coming back. And this, let's just join up the wicks. So that's a bias to the downside. So 131's the support. Immediate resistance today is that midline of the flat Bollinger Band. So there's no real trending direction. So that's 130, 135 is our resistance. Then there's the top of the Bollinger Band, which sits sort of through there at the moment. Again, another pinch is coming because of the non-farm pair at 131.50, and then the trend line up here, or whatever that's coming down. So this again, another one's biased lower, but it doesn't want to get down here, does it, at the moment? So there's 3, 4, 1, 2, 3, 4 fractal lows there above 131. So there's a bit of support, quite significantly above 131. But last 2 hours have been to the downside. So a breach of 131 would show some more weakness, but it's more of the sideways action here, legit on cable. Unfortunately, it's not a lot going on there. Maxim. How will it be affected? US oil. Well, a stronger dollar should weaken the oil market, but obviously the fundamentals remain this week quite significant for oil. We've had this 180 million barrels of US reserve being pushed in to the US market to relieve the price of petrol and diesel, or gasoline as the Americans call it, in the United States. That's going to go on for 6 months, so it's quite a significant, it's not huge, but it's quite a significant gesture. The reserves will be replaced as the price drops, because we're still very, very bid on the oil price. $100 plus barrels of oil. Where's my US oil? Have I not got a US oil chart? I haven't got a US oil chart here, sorry. This is a different workstation I want to see. So, new chart. Let's look what we're looking for. We're looking for metals, energies, futures. Let's have a look at US oil. Choose the same template we've been doing all day. So we've got the daily. You can see what a huge rally we've had. 125 plus 126 it was, wasn't it? On the panic. I thought I had an oil market down here. Did I not? I'm sure I'll have worked on an oil one before we came on air, as they say. Obviously not. Obviously not. Sorry, my friend. So what? 126. I did, because I remember putting in the $100. Can I just? There it is. There it is. Right. I thought I had. So our March high was here 125, 116. Our high this week or last week, and we come down very significantly there, and we're under $100. So some big volatile moves. So $100 still becomes play. But the 92 level, you can see this was it was edging up gently, nicely, December, January, February. Obviously, the panic and the worry after the invasion, we got a big ramp in the oil price. Obviously, Russia, huge reserves, big producer. Obviously, natural gases and the ripple effect that's had on lots of other commodities as well. So we topped out at 116 at the end of March, and we started to drift down, and that's our downtrend now here from this top last week. And so 100 is a big round psychological number. Will we hold that? Well, at the moment, if we go down 4 hours, We breached it earlier today, and we continue to move down. So intraday, there's 100. We've been under $100 most of the day. Brief spike earlier on the news that Ukraine had sent missiles into Russia and bombed a Russian depot. Then we've rolled over, and now we're back down here. Our low today is 97.80, and we're a bit off that at the moment. But again, that's buys to the downside. So overall, Maxim, oil remains bid, but the frenzy of the initial impact of the war has disappeared. So we now hold at $100. The US have brought in these reserve barrels to ease the price of gasoline, particularly for US citizens and voters, more importantly, not politicians like. And also, OPEC have met this week and said nothing about increasing production. The Saudis are playing very, very hard ball. It's all to do with personalities and respect, as he calls it, because Biden doesn't accept, but the Crown Prince, he doesn't recognise him as the leader of Saudi Arabia. The father is still the king, and he is what Biden recognises. So there's a big personality clash between Biden and Crown Prince bin Salman, rightly or wrongly. But Saudi are not turning on the pumps, and perhaps they could. But there's lots of other issues surrounding that as well, obviously. But at the moment, oil remains big, and a $100 barrel has a massive impact on inflation and those countries that need to import oil. Daniel, CAD-Swiss, that's a nice change. Daniel, thank you very much. Nice to look at something a bit different. CAD obviously supported by the oil price, and the Swiss franc supported by a rally in the safe haven bid, and that's cooled recently. Obviously, the oil price that we've just been talking about has cooled recently. So let's have a look what it was CAD-Swiss, wasn't it? Let's have a look what CAD-Swiss, and the CAD is generally quite well bid, and it might, CAD-Swiss here, may have quite a positive outlook going forward. Why do I say that? Let me do that one. Yeah, that one. If we go to let's go to the daily. So this was CAD rallying on, as obviously the oil price rallied through March. We had a top which took us to 0.7515 here intraday. But on an end of day basis, we couldn't get over 75. So another big round cycle number. We've got 0.7463. So we couldn't get to 75 on an end of day basis close. CAD has come down as the oil price has come down the last 3 days. No particular surprise there. But interestingly, today and yesterday, we've been down to test this 20-day moving average. So our support very much sits here for CAD-Swiss. No, it doesn't. It's a wee bit higher than that. Win-win for the dollar. Over on FX Street, the headline here, double dope race hike. So it's potentially, pushed it. It's strong data, as I said before, so therefore it should benefit the dollar. Certainly an issue which has done today. But the other thing to bear in mind, guys, history shows us as well, when rate hike cycles start, the dollar starts to weaken paradoxically, because the dollar quite often gets ahead of itself. But at the moment, for now, the dollar is likely to remain big. But back here for CAD-Swiss for Daniel, big daily support sits there at 73.70 or 73.76, and we've bounced off that today. But to go higher, Daniel, you can see we're above the 20-day moving average. So that's good. Can't zoom in anymore. I can. There we go. So there's our 20-day, which has been down to test. So it may have rolled over. We need to get over 74.63, this high from earlier in the week, whether we will or not. It's difficult to tell at the moment. But that's a key support area there, through there, 73.70. It rallied up quite nicely, then went sideways, run out of steam, come down. So it could come down as quickly as it went up. MACD is looking like it's rolling over. Zoom in. Here you can see the signal line is still over, but the histograms here, you can see, is under the signal line now. So it may be showing some weakness, but we need to break under really this 73.70 area for it to move down further. An intraday today, it's the daily time frame. That's the 5 and the 9 EMAs there are converging really where we are now at 74 itself. So a break of 74, then 74.63 would bring in 75, and to the downside 73.70 needs to break to go down. US oil will drop like gold. We'll see, Simon. It's rolled over certainly, and it's been very, very volatile. Many say it's particularly overbought here. You could here. This is the stochastic. No, this isn't this isn't the. Yes, it is in fact. So it's not that overbought. The stochastic. These are 533. They're very spiky stochastic. So this is saying it's going down at the moment, but the stochastic is suggesting that this may offer us some sort of buying opportunity down here, as we had here at the bottom here, where we went to 92. So we could have some more weakness under $100 if indeed we close the week under $100. This is a 4-hour chart. The 1-hour chart, it's looking that way at 98. So but on the daily basis, you may be right, Simon. A bit of weakness, but there's certainly buyers down here at 92, because this is the general upward rally before the war. We had the hiatus of the war during March, where we went all the way at 126. So there's some big money being made and lost on this volatile move in the oil market. But certainly buyers at 92 and 95, I would argue, on that price action. On US oil, Anchor, NFP's out. So these are not long ago. Going for as well. It's lucky. It's certainly bids since the non-farm payroll. It just adds to the pressure on the Fed to act more quickly. People would say so. There's lots and lots of queries in it. Check your gold. Check our gold signal trade. Go and sell it somewhere else. Trade, particularly my friend. Good morning, Dominic. I guess you're in. I don't know. You're in the Caribbean. If you're saying good morning, or somewhere in Latin America, I guess. I hope you're well and staying safe. Dominic's asking, how are we looking for gold for this NFP? Well, obviously we talked about, hopefully you've been here all the time, but certainly NF gold here, drifting lower on the stronger dollar. 120 or 1920 is a big support area. 1988 or 1919, you can see there this intraday low, but certainly 1920 there support, and we may find some bids as we get down to 1920. Dominic, okay. So everybody's obsessed with gold. Let me just explain. Gold is not trending. Okay, for the second half, the last 2/3 of March, you can see clearly it's in a sideways action. The moving averages have moved up, or we've trended up here through February. We spiked at $2,070 on the worry over the war, and we've come back down, and we're just lacking direction at the moment. So there's my 1920 level. There's the intraday lows for March at 1891. So hold $30 intraday action there. So some volatile days. But really on an end of day basis, you can see here it's bit range bound. 1950 to the upside, needs to break to take this long on a stronger basis. And 1920 needs to break on an end of day basis for this to move lower. So we're trending in that $30 gap between 1920 and 1950. So use your oscillators. Buy at the top of sell at the top of the channel, and buy at the bottom of the channel at the moment. That's kept you nicely in a few pips as we've been going up and down. And as trade ticker keeps telling us, buy at 1922. Well, you can go and take his signals elsewhere. Okay. Jamaica, good afternoon, my friend. Only been to Jamaica the once. The kids loved it. We had a massive thunderstorm when we got there. Nice holiday, good fun, nice people, great cricket as well. Bitcoin, nobody's asked about Bitcoin for ages. Anthony, Bitcoin's had a really good week. We got over that 42,000, 45,000 channel. We broke over the top of the 45,000 channel here in towards the end of March. And we just couldn't get over 48,000. We've been down for 3 days at the moment, but we're back into the 45,000 top of the channel, which should come from yonks ago. This is the day I've got the weekly. This was this range here. So this is 48, 45, 40, and 42 and 40,000 down here. So it's bid a bit to the upside, but we've had 3 days down thus far. So today, what's going on today? Well, we've topped out here on the 4 hour, not necessarily today, but this week. We've topped out big down candle yesterday as the month closed out, and the dollar was bid and equities closed down. So equities went down yesterday. So did Bitcoin into the close yesterday. And if we go to the daily action today, so that was yesterday's close. Now we legged down again on the stronger dollar overnight, back into the under the 45,000 level. And as you can see, going forward now today, it's looking like it might be edging up. So there's a bit of life in Bitcoin on the hourly time frame. See my, there you go. On the hourly time frame from this dip down to 44,000 earlier today, and it's ramped up. Although we got the stronger dollar, so hence Bitcoin has paused its rally, but it has just broken here in the last hour into the top half of the Bollinger Band. But that looks like that's consolidating just above 45,000 and not moving much higher by the looks of things in these last couple of hours. Obviously, US markets open in about 15 minutes. Cash markets, that is. Maybe we move higher. Top of the Bollinger Band here intraday, if you're trading Bitcoin intraday, is coming down to 46,000. So that would be a resistance, 46,000. For Bitcoin, MACD starting to turn up, smaller, lower histograms, and the signal line starting to turn to the upside intraday, Anthony. But certainly on a daily basis, we've had a nice rally for March into 48,000. Couldn't break that and back $3,000 to 45,000. So 45,000 is the key support now, having gapped up last weekend. Over the weekend. So can the $45,000 level hold is really the question now. So good afternoon. Joshua, hello. Hello, Nigeria. Hope you're well. Martin is asking about the euro. Let's have a look at euro. I say last time we looked at an hour or so ago, it's moving down. We've tested this low here, 110.36. In the last hour because of Bitcoin, because of there's non-farm payroll. So the initial panic was to the downside here at 3:30. So we tested 110.36. We bounced off that a wee bit, but again, even on this 15-minute chart, you can see it's still biased to the downside, sideways, fractal highs, but the fractal highs are getting lower. The highs are getting lower. The lows are getting lower today, but we may have some support. So go up to that 1 hour time frame, a default time frame, that's still weak, and it would need to break euro 110.65 to move back over the 20-hour moving average, which it hasn't done, has it? So this baby has been short and trending lower since yesterday at 11 o'clock. Could have stayed in, I would probably take you out perhaps, but then got back short here, sideways in the Asian session, down this morning ahead of non-farm payroll. Retraced a wee bit, but the 20 hours is kept you short here. So that remains short to the downside intraday. Martin, my friend. Caribou! Can we look at Dollar-CAD 4 hour and one? There we go. That's the sort of questions I like. Very specific traders. So let's have a look at Dollar-CAD. We haven't actually looked at Dollar-CAD either, so nice to have a look at something different. So there are your two charts. What's the higher time frame doing? So what's Dollar-CAD doing on a daily time frame, Caribou? Well, as you can clearly see, and I'm sure you know, it's been in a huge downtrend for March as the oil prices have crude and CAD has rallied quite significantly, even with a stronger dollar. Remember, the strong dollar's been up against most other currencies. So from a high here at 129 at the beginning of March, we broke that, and again on an end of day basis, this remains short significantly here. The break was happened here again, the 16th. Remember, that's a key day. We keep mentioning all the time, don't we? End of day traders. Short here on the 16th of March. We then broke to new March lows the following day, Paddy's Day, St. Patrick's Day here on the 17th. and it's ran. We ran through 125, and we're sort of oscillating now around that key psychological number 125. It's a big round number for Dollar-CAD, 125. As you can see, it provided a big fat support here back in January when the last big decline was happening. So 1, 2, 3, 4, 5, 6, 7, 8 days. Couldn't really break and close on an end of day basis below 125. Now we bounced off. Is that going to happen again? Well, the only caveat I would say is that the 125 is breached as far as an end of day basis. So it's weaker now than it was in January before the war obviously took place. So Dollar-CAD now has key support not only up below 125, so on an end of day basis, the support comes down to 125, probably 70 really. I can't really know that. Yeah, 124.70, and just this week we've been as low as 124.25. So it's still biased to the downside. So we go down to shorts is what you'd be looking for on the 4 hour. It's flattened out here on the 4 hour, but it's still biased to the downside because the daily's still down. You see the fractals moving down quite nice, but you can see that support there, that 124.75. And again, 4 hour here is really directionless, to be honest. Caribou here, can't tell you anything. Play the channel, whether you're using the 125.35 top or the top of the Bollinger Band, and see how the fractals are playing the channels as well. And buy down here at 124.75 and sell up here at the moment. That's what that 4 hour time frame is showing us. What the MACD is trying to suggest to us is that we're tilting a bit higher, that it's a sloping, very weak slope, but there's big gaps here, so it's very directionless. There's no trend here. That's what that, you see the price action going sideways, and MACD is very much a trending indicator, remember. Anyway, it's formed from a series of moving averages, so therefore it's looking to try and break up, but there's no clear break of 125. So 125.35 to the upside, 124.75 to the downside. There's your channel on your 4 hour, and the 1 hour that'll look a bit wide, but again, it's very ambling, isn't it? Ambling through 125. So no direction there for me, Caribou, my friend. As far as yesterday, if you're going to get, on a 1 hour basis, we did break this 124.75, went as low as 124.62 briefly, but then was bought. So yeah, these are buying opportunities down here. And today's low has been a tad higher, and that takes at 124. What's that? That was 124.80, so 5 pips higher than that 124.75. So a bit directionless, Caribou. I can't. That's not doing anything for me. Maxim. Was it Maxim? Did you ask before about oil, my friend? Because we looked at US oil. There's lots of questions coming in. I think I have. We looked at Guppy for you. Thanks, mate. Oh, right. Very good. I must have done. Thank you, says Daniel. That's absolutely no problem, my friend. Remember, that's what we're here for, guys. Sorry, it takes a while to get to all your questions because there's an awful lot of you today because it's non-farm payroll, but we will get there in the end. We're here to help. We want you to be successful. So you're successful. You tell your friends, and as I say, don't be afraid to withdraw your money. All countries' trades should be done only in gold and silver. That's a very strong statement, Kumar. I don't know how old you are, Kumar, but the gold standard was breached and broken back in 71 when the Forex market was born. It's an argument that we go back to gold and silver. We shall see. Kumar, gold and silver are the new Bitcoin. It's a very interesting comment. We'll see. Bitcoin, remember, is only a few years old. Gold and silver is as old as the hills. Remember, it's shiny. People like shiny things. It's human nature. Malleable, both of them, so we can make jewelry with them. They're quite heavy, so they feel like you've got some sort of value. You have some sort of intrinsic value because you can feel it. And obviously, certain cultures, certain seasons are good for these two very, very important precious metals. And the other thing about silver, I'd say, Kumar, is that it's also very important as an industrial metal as well. Probably more so than gold is. Gold is more of a precious metal, whereas silver is in demand as an asset. For industry as well. We all look at the silver chart. I don't think that's what you're asking about, but let's have a look at the silver chart. Another one that's rallied really, really strongly here from these lows down here at $22. Here in December, we went under 21.50, didn't we? But a strong February for the commodity markets overall, characterised here by this strong rally in the silver market as well, 26.95. So we're in a smidge of $27 in the height of the panic of the war here at the beginning of March. We've come down since, and we're currently sort of in a key support area at 24.50. But biased to the downside a bit, like we said with the gold market. March low for gold was 23.95, so under 24. But again, that was an intraday spike lower. On an end of day basis, the support sits through there around about 24.70. Interestingly, today we're quite significantly below that at 24.70 level, which sits about here. No, it doesn't. Well, we're talking about 24.70 is right up here on the 4 hour. So yeah, it's again a little on buy slow, probably on the strength of the dollar for silver. Okay, Junior, good morning, Jamaica. Hope you're well, staying safe. Jess says, what about euro and pound dollar, please? Jess, I didn't before, but I don't know what time you've come in. What time does it say you've come in? 10 past 4. What time is it? 20 minutes. You've probably just arrived. Jess, so let's go back to those two. Sterling's first here on my chart, if you don't mind. Again, yes, pound to dollar. So here the 4 hour, 3 hour, the last 3 hours cable has been lower. We've breached and put in a new daily low here at 131. So I'm speaking. So again, dollars follow through. We got some more. There's no ahead of US Open. So this is dollar bid testing the key support area at 131. So 3 big down hours here for cable. I don't know if there's any news being breaking with regard to cable. Now we've just got some comments from the head of the Chicago Fed, Mr. Evans, who's traditionally been a bit of a centrist, but here he's talking about 7 hikes this year and 3 next year. I'm not sure where there was talk about 50 basis points in 2 of these hikes. I'm not sure what he's saying here. Let's just have a quick look. What Evans is saying, that's 250 basis points. 250 basis points Evans is talking about. And he's talking about a terminal rate of 3%, so 3% for US interest rates rallying up very increasingly pricing. Now the Fed, following the, I'm just looking at the CME chances of rate hikes. They're now talking about the May the 4th meeting. The next time the Fed meet, there's now a 73% chance of a 50 basis point rate hike. I think that's going to go up as the consequences of this, certainly as the consequences of the war drag on, and the consequences of those hot jobs data and this inflation pressure as well. So 73% at the moment, a 50 basis point rate hike. There's got certainly more to come. So here we've got stronger dollar post non-farm payroll and cable right into this key 131 at the moment. So that's from being a bit of a sideways action. That is certainly, well, I say that would have been short here, but it's really sideways, not really trending. But you see what I was talking about before about the squeeze on the Bollinger Band. We had this squeeze here, down here, so that would have been enough to get short because it's closed under the 5 and the 9 and returned back under the 20 as well. So that short has followed through really nicely there. The squeeze of the Bollinger Band, even though they're horizontal, not going anywhere. And that's taken us under 131, and we continue to drop to the downside. Here on this 1 hour chart, if we look to the left, where's the next support? Well, obviously 131 is a big psychological support, but we have drifted below that. So here, taking us back to Thursday, the week, that's not out of the question, but the weekly low, back to the 29th or whatever that was, took us down here to 130.50 again. Whether we're going to get another 50 point low out of the run for the rest of the US session into Friday, we don't know at the moment, but certainly that's weak and starting to break out to this sideways action from Thursday to the downside. Pound on that 1 hour time frame. Jason, as far as euro will be a similar sort of worry, but it's not as aggressive. See, it's the same time frame, the 1 hour time frame, but again, it's biased lower. And as I said earlier, that this has been short here on this 1 hour time frame from yesterday morning. Week into close, we consolidate in the European session, then a big down leg here this morning in Europe, and then another down leg here ahead of that non-farm payroll. This is the 2 till 3 candle here. It's like showing it up. So again, suggestion that 20-hour moving average is hanging, and again, see how the Bollinger Bands has come in and nipped in, and then we got down. So we're looking down. So this 110.36 intraday low, which we've done just in this last hour, could be tested again. So again, it's a stronger dollar ahead of the cash open of the US markets. We're not yet open yet. It's only 25 past 4. I'm going to have to go in a minute though, because I've got some stuff to tidy up before the week goes and people are leaving in an hour or so. So there's bias to the downside, my friend. What about pound yen, says Junior? We looked at pound yen a minute ago, but I'm happy to have a look at it again for you. Where's he gone? Unless you were here, Junior, I don't know. 1 hour and 30 minutes. Junior, no. Where's he gone? I'm getting tired now, guys. Sorry. You don't look at the stock market. Where's pound yen gone? Where's pound yen gone? How's it done this to me? Where's pound yen? I can't see pound yen. There it is. Pound yen. Junior, pound yen. Let's have a look. Daily, as I said before, big rally. It's been long from the 16th, remains long. The support is here at 156.90. That's where the 200-hour is. 200-day, I should say. Again, see another squeeze. Not really a squeeze, that one, but a big breakout here a few days later once we broke over this highs from February. I'm repeating myself again, but big candle here on the 22nd this time, and then spiked all the way to 164.60. So hundreds, if not thousands of pips on offer there to the upside. 160 is your support today, Junior. So again, I don't know what time frame you're trading this. Let's have a look at 1 hour. You're saying 1 hour, Theodore. So again, that one's broken high this morning, and it's remained high, but we can't get over 161. That's resistance. It's not moving anywhere. But that, in the short term, is your channel. If you want to trade on the short term, that's your channel going forward. But remember, the Japanese, the main yen traders are asleep now. It's their weekend, and London we're into Friday afternoon. So there's your channel for pound yen today going forward. 161 to the top, 160.70. So you've got a 30 pip range. That's quite a tight range for that pair, but that's where we're trading at the moment on intraday basis, Junior. You've asked for 30 minutes on cable, so I'm assuming you're going to do 30 cable. 30 minutes on Guppy as well. So the 30 minutes, there we go. There's your so look, you can see selling at the top here, 161. How long will it hold for? Who knows? But we're up at the moment. And the support is there, that 160.70. So clear channel at the moment. So you'd be looking for, down to 5 minutes, you'd be looking at some sort of pin bar. Let's go. Let's look 5 minute chart. Some sort of pin bar, which hasn't happened actually, interestingly, on the 5 minutes. So that's actually quite well bid on the 5 minute chart to the upside. And again, see the squeeze here on the volatility of that non-farm payroll. There we go. There's the 5 minute. See that big volatility? It's biased. So this is biased to the upside. So maybe some selling coming in here if we get to the 161.09 here on the. Is that the price? Yeah, that's the price actually. We're up here and off this chart. So there's your channel. Are we going to break out of that? If we break out of that, next resistance would be 161.20. Then we go to 161.45 from here, from the 29th. So breaking out. You want to look at the same thing for cable? Let's do the same thing for you for cable on the 1 hour and a 30-minute cable. 1 hour, as I say, that's breaching 131, and maybe you would expect some sort of support down here, but certainly the 1 hour trade is short from that squeeze on the Bollinger Band ahead of non-farm payroll. So there's some pips being bagged there, and the 30-minute would be similar. There we go. trending lower, looked like it was going to go up, didn't happen, and that's been short, really. Is that ahead of, in fact, yeah, into non-farm payroll itself. And we've bagged some pips. So again, that's ran to 131. That would have been a many target 131, but again, that's short and the 1 hour short on cable as well. My friend, do you trade the volatility indices? Junie, you're obviously not trading with us. The VIX is the only volatility index we offer. It's directly related. Our CFD is directly related to the VIX index in the United States. Brokers that offer volatility indexes are offering synthetic derived derivatives from what their brokering firm and team are offering. So be very, very careful of trading something that doesn't exist as a real index in the real marketplace. Okay, so for us, yes, I like trading volatility indexes. Sorry, let's have a look. Open chart. You should be looking at indices. And the VIX index is the one you want to be looking because that's a real index. This is our CFD of the real of the real VIX index. VIX 30 or VIX 50 or VIX 70 or whatever they call it. Be very, very careful because you're trading very much against the broker. They're not they're not real indexes. They're not real products, gentlemen, ladies. Be careful. But what's the VIX saying? Well, on a daily basis, the VIX itself, the volatility index. I love trading the vol because it really moves. You can get some very significant moves. It's this is obviously as the stock markets have been going up in March. The VIX has been coming down. So we went all the way to 36 and beyond 36 at the beginning of the war. Here, fear was rising quite significantly, as you can see here. The invasion took place here on the 24th. So we rallied to 33, 80, 34, and it got even more panicking as we went to 36, 42 here at the beginning of March. We've cooled a bit as the equity markets have come back here. So again, the big candle, what day? Well, we'll be talking about it all afternoon, haven't we? The 16th of March, and it's been trending lower ever since. So we've broken down. It remains short. The VIX here, 2150 is the low. That low is 2120 from back in, that was a February low, wasn't it? 21, which we also just about tested here. So that remains short. The fear index 20-day moving average sits at 2690, and that went short then, and it remained short to the downside. Junior, my friend. Julie says, thank you, no problem. Right, guys, I'm going to have to go. The US market is just open. Let's have a look at how the US market is opened. We're positive, 0.35, 0.50 on the Nasdaq, and the Russell is up 0.6 of 1%. So it's a positive start. So the S&P 500 is up 14.5 points. Nasdaq's up 75, nearly 76 points on the open. So a strong start for US equity markets. So we'll finish with the Nasdaq, shall we? So this is the futures. Ticking up here at 7,000. Hang on, so that's the UK. I didn't know, right? The Nasdaq futures here still sort of trending sideways, but we've had a positive start to the cash market. So all in all, ladies and gentlemen, it's unbelievable. Thank you, Jenny. Where are you, my friend? Whereabouts are you in the world? Is it morning or is it evening time for you? Do keep in touch. We're here to help, guys. All of our team, we're here to help. So basically, I'm going to leave you with this Nasdaq chart, sort of sliding sideways. Actually, let me leave you with the dollar index itself. We haven't talked about that today. This is the dollar index on the 1 hour basis. So it's bid. We're back over 98.35. We've had a strong day yesterday, strong day today. 99 is up there, and dollars bid on that strong non-farm payroll data. So more pressure on the Fed to move more aggressively. So let's just recoup. So the headline for non-farm payroll missed expectations. Came in at 431,000 compared to 490,000. However, the last month was revised much higher to 750,000. Then across the board, the data was strong. We had a beat for earnings, came in at 5.6% from 5.2%. Participation rate was up to 62.4 from 62.3. Doesn't sound a lot, but it's quite significant, even one tick. Unemployment, the other key headline, was down 2 ticks at 3.6%. So we're getting to full employment level areas in the US. That's going to obviously put more pressure on earnings, which we've had this 5.6 level. It was, although the headline number was sort of missed by 60,000, it's likely to get revised higher as the number for March got revised higher from 678,000 to 750,000. So that was a significant revision to the upside. So a strong non-farm payroll day for the US. Let me just check if there's anybody over on Facebook who's got any more things I want to ask or add. It doesn't look like it is. It looks like you've been and gone. It's very odd seeing yourself staring at yourself. But no, that looks like that's gone. So I'm going to call it a day, ladies and gentlemen. Thank you for your attendance today. Thank you, Junior, for your very kind comments. I'm as fluent as possible for an old guy. So take care, everyone. Have a great weekend, and we'll see you soon. There we go. We'll see you next week. Obviously, we're into the full new quarter. We're going to issue our second quarterly outlook next week as well. Probably by this time next week it'll be done. God, my hair looks terrible. I should have washed it this morning before I came out. Never mind. Okay. All right. Take care and see you all again soon, everyone. All the best. Bye-bye.